Today we're going to be looking at how to create a good portfolio based on information and data science. So what I have done is I have created an algorithm that goes through the stock market and utilizing machine learning and artificial intelligence provides you with a portfolio that is diversified by sectors. So these are the stocks that the algorithm selected for me, and that was after the system went through rigorous training in order to understand what is a good portfolio and what is not. So the first thing that it accomplished was it was able to go through and tell me which stocks that I was looking into had recently gone through a panic buy or a panic sell event, and it highlighted those with a triangle. Now, I call those a bubble event because obviously when a bubble has too much pressure in it, it will eventually burst. What that allows us to have afterwards is the stocks that did not go through any panic events and that are also having good fundamentals. Now, this set of stocks are then weighted against each other within the same sector, and what that gives us is a system of stocks that have shown to include good returns over the last 3 years. The last step in creating this portfolio is to actually make it and follow it. Now, this portfolio was created on Friday, February 13th. There was no trading on February 16th, which means the first day of trading was today. According to the portfolio in Google Finance, which is where I'm following it, we're able to see that while the full S&P 500 only went up by 0.1%, this portfolio went up by 0.33%. So when I purchased this portfolio, it cost about $489,400, and it is now worth $491,048. What we're going to do is we're going to follow this portfolio for 1 month, and we're going to see which stocks are going to hold up and which ones are going to be let go. So the way that we are going to do this is we added a 3% trail stop on them, which means that from the peak of the purchase price plus the gain, if it drops by more than 3%, the stock will simply leave the portfolio. So right now we have winners and losers. So all of the stocks that you here see at the top are the ones that have earned money today. And the ones that you see at the bottom are the ones that have not yet earned any money or are actually losing money, with the biggest loser being Primoris Services Corp, which since Friday has lost about 2.49%. That means that if it loses 0.5%, it will automatically exit the portfolio, but it still has a little room to grow before we let it go and reposition those funds into something else. So what does that mean? That means that as a whole, the portfolio is performing well since Friday, and it is made of 80% stocks, 20% ETFs, and within those, 41% are large companies, 25% are low dividend investments, and 43% are high price earning investments. So we're going to follow this portfolio for the entire month, and we're going to see if, first of all, it performs better than the S&P 500, and secondly, what is our total return. At the end of the month, we're going to rotate the full portfolio based on the data science that we're able to acquire from the stock market.